periodic posting. Periodic postings are nothing but what all activities you are supposed to perform on a monthly basis. It can be your interest posting, it can be your vendor invoice posting, it can be your customer invoice. If you are having IFRS 16, then you will be having depreciation posting as well. So depreciation posting will be done through FAB only. It won't be done through either of the REFX T code, as it is part of finance and accounting, asset accounting. It will be done through no asset accounting only. So you can perform the periodic posting run regardless of the contract time. You can simulate or reverse posting runs. You can perform the periodic posting for a contract directly from this contract. A posting log and error log provides information about the status of a posting. So what does it mean by regardless of the contract type? As I mentioned, whether your contract type is lease in or lease out, you can perform your periodic posting for either of them. Within lease in also, if you have multiple contract type, you can run your periodic posting for each contract type. Okay, you can simulate or reverse posting run. So simulate is nothing but you can before posting or before posting for proper financial postings. What you can do is you can simulate and check whether the accounting entries are getting posted correctly or not. You can check in simulate run whether there is any kind of error. Okay, so this is what you can check in simulate run. Apart from that, let's say that okay, we have posted an interest in expense accounting entry, and it seems that we have posted incorrect because ideally that was supposed to be posted on first of date, and we have posted it for the last of date, that is last date of the month. So what you can do is again you can reverse from REFX only. We have a REFX T code itself. So using that T code, you can reverse the posting. The reason why we are reversing it from REFX and not from finance is because if we'll reverse that particular accounting entry from finance, then it won't have any of the implication in REFX, and it won't stand like it won't create that particular amount back in your REFX contract, right? Because ideally, when it is reversed, again you will have to post that particular entries. So it has to be posted from your REFX contract. That is why we use REFX T code itself for reversal of your posting entries as well. Okay. So always make sure if you have posted and if you have used any of your REFX T code for financial postings, like your interest posting, your invoice posting, then there are some reversal T code available within REFX. So please make sure you use those T codes only for reversal and not from financial reversal. Okay. You can perform periodic posting for a contract directly from this contract. Okay. What does this mean? So let's say I have a contract type called vehicle, lease in vehicle, lease in building, lease in office equipment. Okay. Now under lease in vehicle, I have 50 contract. Under lease in building, I have 10 contract, and under lease in office equipment I have around 100 contract. So overall I have 160 contract, right? So it is not necessary that I need to run 160 contract at a time. There are multiple options available. You can run your periodic posting for based on your contract type as well. Let's say if it is a lease in vehicle, you can just enter the lease in vehicle contract type and run for all the vehicle contract types. Okay. Apart from that, within lease in vehicle, if you want to just run it for one of the contract, not all of them, you can do that as well. You can just select the contract number, company code, and run for individual contract. Okay. So we do have functionality available on that basis. Apart from that, there is also one more where like a dynamic variant is available wherein you can select your business partner as well. So let's say there is a business partner who has a contract in leasing vehicle, leasing building, and leasing office equipment. Now we are not sure which all contract number are for that particular business partner. So simply what we can do is we can go to that screen of receipt and a revamp, and just enter the particular business partner number itself. So based on the business partner, system will pick up all the three contract which are assigned to those particular business partner, and it will run for that. Okay. Apart from that, a posting log and error log provide information about the status of a posting. It is just like you, when we extend, like let's say we have extended our GL. After extension, using FS15, after extension, we do get a error log or posting log, right? Whether the GL account has been extended or not. If not, then what is the error? So in similar manner, we get a posting log wherein you can see what is the document number, and you get error log wherein you can get error as well. Okay, so this is how it gets. So periodic posting process. How exactly the periodic posting process start? Okay, the first thing is the periodic posting runs selects all flow records, planned record in the cash flow which are due and are not yet posted. Okay. Then comes the system finds an account determination for each flow record and generates a debit and credit posting for its financial accounting. The corresponding item in the cash flow is marked as posted. So this is the sign when an item has been marked as posted. Okay, this particular yellow box with the green tick. So let's say if one of the line item is not marked as posted, then this particular green tick will not be there. That means yet to be posted. Okay. What does it mean by periodic posting run selects all flow records, planned records in the cash flow? So we do have a cash flow available within contract. So when we particularly create a contract, let's say we have created a contract for 2 years, starting from 1st of Jan 2024 until 31st of December 2023. So what does system do? It also creates a cash flow and shows you that how much exactly you are going to pay for a particular contract in future, and what are the amount. Let's say if the amount is going to differ from current period, it also shows you that what exactly the amount will be and how much differ amount will be over there. So that is how your cash flow is shown in your contract. Okay, so you can see that as well. Again, in front of the cash flow line item, each cash flow line item will have the data like symbol posted or not posted. So this is the symbol for that. Okay. Now coming to condition purpose. What do you mean by condition purpose? So there are multiple condition purpose which are available within SAP system. One of them is posted, one of them is one-time posting statistical, and one-time statistical. Okay. So in which all scenario this all will be taken care into, like which are the scenario. Okay. So I'll give you an example for posted. Posted is a normal common contract wherein every month there will be a basic rent which we are going to pay. In those scenario, posted will be the condition purpose of your condition. Okay. One time posting. What does one time posting means? So let's say at the start of contract, we are supposed to pay a advance or a deposit to our vendor. Okay, I'll take an example of leasing. So at the start of contract, we are supposed to pay XYZ amount of security deposit to the vendor. So this will be considered under one-time posting. Okay. Now coming to statistical posting, again, this will be same as posted. It will be reoccurring entry, but it won't have any of the financial entries. Okay, like financial document will not be posted on this value. It will just show in your cash flow, but it won't get posted to your financial documents. Okay. And what is one-time statistical value? One-time statistical is nothing when we are migrating from legacy system to your SAP system. So we might be having some data or some tenure. I'll give you an example. The same example which I have taken right now. The contract start date is 1st of Jan 2024 and end date is 31st of December 2025. Now, until end of June 2024, the contract was posted out of SAP. So whatever amount or whatever data has been posted out of SAP, we have to bring in that data as well, right? Because we need to show the whole value of the contract, whole cash flow of the contract. So how exactly we are going to bring the 6 months value? That will be through statistical value. So using condition purpose as statistical, one-time statistical, whatever amount we have posted across 6 months from Jan to June, we are going to post that value as a one-time value, cumulated one-time value to this particular condition type, so that we have that particular amount available in our cash flow and we get to know that what is the value of overall contract. Okay, so moving further, periodic posting. Periodic posting for contract. So this is a lease out income lease. This is how your accounting entries will get posted. Your debit will be receivables, credit will be rent revenue, and again debit will be your customer. So ideally, the main entry will be your debit account customer and credit account revenue account. Okay. Then coming into leasing, it is a payable. So payable will get credited. An expense account, that is nothing but cost of lease account will be debited and your vendor account will be credited. Now, company internal lease contract. Okay. Intercompany, this is nothing but intercompany contract. So this will be transferred from one company code to second company code. So this will be based on your cost center. So debit will be cost center contract, credit will be revenue contract. That is nothing but the company which is owning the particular asset. Okay, so we have multiple configurations available within SAP REFX system. When we'll go through those nodes, I'll show you how exactly you can cater to this particular requirement. Okay, because ideally what we do is if we have to debit our customer and credit our GL account, so what we'll do against debit indicator, we will assign star D, right? That is a customer account group. Credit will be your GL account group. If you have a specific GL account, you will be assigning that particular GL. And same debit will be your GL account for leasing scenario, and credit will be your star K, right? That is for your vendor account. But over here, what we are going to do, we are going to debit our GL account. If we have a specific GL account which we are going to use, then we will be doing debit GL account and credit GL account itself. So over here, it won't be any of the customer or vendor account that will be debiting, crediting. Okay, that is how you manage your intercompany contracts. So posting with contract partner. First scenario is leasing expense. Leasing expense is nothing but it will be with your landlord with vendor account. So periodic posting will be rent and service charge. One time posting will be repair, key replacement fee. So repairs, let's say if any of the repairment is done or any maintenance has been done due to say severe damage on that particular asset, then it will be repairs and key replacement fee. Then in lease out scenario wherein income lease is there, master tenant will be there with a customer account. Again, it will be service charge as well as rent. It will be a lease out. So ideally, owner will be leasing out the asset. And same repairs key and replacement fee will be one-time postings. Company internal lease, same, it will be again same. This kind of scenario will be there. Periodic posting will be rent, service charges, and one-time posting will be repairs and key replacement fee. So one-time posting are those posting which are not considered or not available in your contract, okay, conditions. Now, one-time posting are something like that wherein we have agreed, but as and when it occurs, then only we are going to post them, and that too with the condition purpose as one-time posting. Okay. Apart from that, all others will be a recurring posting. That will be your periodic posting. So leasing expense, this is the accounting entry which I have shown you. Debit will be your expense account, which is a P&L account, and credit will be your vendor account, which is nothing but your balance sheet recon account. So your sub ledger will be your vendor account, but at the end it will be a recon account, which will be a balance sheet account. Now coming to lease out. Again, your debit will be your customer account and credit will be your COGS account, COGS or revenue account. Revenue account is a P&L account, and your customer account is a balance sheet account, because the reconciliation account assigned to your customer master data will be your like as a balance sheet account. Intercompany leases. So over here there is no balance sheet account maintained, because as I mentioned, it will be a transfer from one GL to second GL. That is nothing but one GL from one company code to second GL to second company code based on the cost center. So that this is how exactly it will flow. Distribution posting. Yesterday we have seen this scenario wherein the basic rent of the contract is 1000, the operating cost or the maintenance cost of the contract is 300. Based on the total area that has been occupied by each of rental object, we need to segregate the particular cost as well. So how exactly we are doing it? Based on the total square feet, or like not square feet, square meter of area which are being utilized. So over here, if you see, this particular rental object is utilizing 60 square meter, and this one is utilizing 140 square meters. And based on that, the segregation or the distribution of this particular amount has been calculated. Distribution posting process. You first have to post cost or revenue based on the partner cash flow. A document is created for posting the cost or revenue for the contract. That will be first posting document. If the cost or revenue are to be assigned to recipient object, that is nothing but rental object, building, property, cost center, order, or etc. In controlling, then a corresponding distribution rule has to be defined in the contract. The distribution formula specifies how the amount paid is distributed when there are multiple objects. Example, distribution by area, equal distribution, distribution by area, distribution according to the respective ratio. Equal distribution, it will be equally distributed between both, or the number of rental object participating. If the condition only refers to one object, you must enter distribution formula in order to completely post the cost or revenue to this object. When a distribution formula has been created, the system creates a document that is used to distribute the cost or revenue from the contract to the object. So as I mentioned, if you remember in early sessions, I have mentioned to you that we can distribute our, let's say if we have a leasing scenario, we can distribute those leasing amount, the payable amount, to multiple partner as well. Vendor partner, if one contract is having multiple partner, we can distribute that amount as well. Similarly, if the particular amount within one contract, if it has to be distributed within multiple rental object, then we can do that as well. So within the condition type, we do have an object distribution, wherein we can define whether equal distribution or distribution by area or partially distribution, or customize. We can also do a customized distribution, wherein we can specify what should be the distribution to each rental object. Okay, so these are the posting logs. Ideally, this is how, once you post the document within REFX, this is how it looks like. What all fields are there, which all flow types are being used, then what is the condition type. If the condition type has been used, then what will be the debit credit key. Tax type, tax group is based on the tax group, it will calculate the tax code as well. Okay, so that is how it gets calculated. Apart from that, we also have some further documents. When we click on this particular line item over here, if we double click on that, we'll get to see RE document, we'll get to see accounting document, we'll get to see cost CO document. So whichever like processes or whichever module the particular entry has been posted to, we'll be able to see all of those documents over here. Okay, again, based on the GL and accounting like posting key, we can see over here whether like which is the debit GL account, which is the credit GL account. Okay, So that is how it looks like. And this is nothing but your real estate object, and we'll be also able to see the contract number based on which this is the contract number. Okay, for this particular contract posting has been done. So that is how your contract posting will look like. Okay, any questions on this? Any queries either on posting log or on distribution process or something else? Okay, so if not, we'll move ahead. So this is how your contract screen looks like. This is the contract screen. When we use RECN, this is the very first screen based on the contract type that you have selected, it will appear. So over here, if you see the very first thing is contract type. So once you have selected contract type, based on that, all the number ranges will be populated. If it is an internal number range, once you save the contract, it will automatically create the number. Then you have your contract name available over here. Then you have position date. Let's say you have taken like you have got the position early. I have a contract of 2 years from Jan 2020 to December 2025, and I have requested my owner, that is nothing but my landlord, to provide me possession of that particular early, so that I can do some fixture and fitting or my kind of decoration. So I can maintain that possession date as well over here. Then there are initial contract date. What does this initial contract date means? So initial contract date is nothing. Let's say if we have a contract wherein renewal has happened, when the renewal happens, it in condition it will take up the new renewal date, right? So over here we can maintain what was the initial contract date. Comes your main contract date. Main contract date or old contract date is nothing but this is something, it will come from your legacy. Let's say in legacy system you have maintained your old contract date as ABC. Now in SAP you want it to be system determined contract number, like 100 should be first contract number, 101 should be second contract number. So over here the contract number will appear from your SAP system only. But if you want to have a linkage with your legacy system, wherein you have maintained all the old contract numbers within your legacy system or Excel sheet, you can maintain it over here. Then comes your tenancy law. Tenancy law is nothing but which in which country this particular contract has been created, industry, what industry the contract is from, currency, again like the currency of contract. Again over here it can be that your company code currency might be different and your contract currency might be different, so you can maintain this over here as well. So let's say my company code currency is INR, but my contract currency is USD, so I can maintain this USD contract over here. Valuation relevance. So there are few drop downs available. Yes, the contract is relevant to valuation. No, the contract is not relevant to valuation. High value contract, that means it is relevant to valuation. Low value contract, again it means it is not relevant to valuation. Or addition to the contract is also there. Okay, so these all items are available under valuation relevance. So these are the statuses of the contract based on the activity which you perform. If you remember, I have mentioned to you that unless and until you activate your contract, you won't be able to post any line item on any financial postings to that contract. So over here, you can see whether the contract was activated or not, and whether the contract is approved or not. So approved is nothing but it will come through your workflow status. Yep. So over here, if you see, this is the landlord. One business partner is there, which is having multiple, like there are multiple business partner assigned to this. One is landlord, one is pay, one is legal entity, one is lease analyst, one is lease admin supervisor. Second is the last one is transaction approver. So why exactly we are maintaining all of these partner in this? Because we need to identify who is the landlord. Landlord is nothing but the person to whom we are going to pay the amount. Who is the payee? let's say landlord might be different and payee might be different. In that case, we'll assign payee as well. Who is the legal entity? Again, legal entity, landlord might be having one of the company, and landlord might have asked that, okay, instead of paying it to my legal entity, pay it to me, but you can also assign the legal entity to the contract, because ideally it is one of my entity. So we can assign that lease analyst, who is the admin supervisor. So based on all of these, your workflow will trigger. And if you see, start and end relationship is also maintained. So let's say one landlord is there. There are two landlord in one contract. For 1 year, one landlord is going to collect the amount, and for second year, second landlord is going to collect the amount. So based on the start and end relationship date, we can maintain that particular requirement. So wherein we can start and end will be maintained for one landlord, and the second landlord will just maintain start date, because ideally based whatever contract end date will be there, based on that it will automatically pick up the end of relationship date. Or even if you do not maintain it over here, by contract end date, it will terminate it. Okay, so this is your valuation screen. Okay, over here, if you see, there are two line items. So can someone tell me why exactly there are two line items for this particular individual object over here? So these are being used for different reporting, as in different accounting standard and accounting principle. So first line item might be for local GAAP, okay, and second line item might be for IFRS. So we have to add both of the reporting standards which are required. We'll have to assign your object over here. Now, if you see over here, there are few fields available. Start of consideration, probable end date, interest rate, frequency, account assignment, valuation behavior, and absolute end date. So these two dates are very important, not two, three. Start of consideration, probable end date, and absolute end date. Okay. So what does start of consideration mean by? Okay, so let's say I have a contract for 2 years. Yesterday I have taken an example wherein I have a contract of 2 years, but first month of the contract is a lease free contract. That is a free term contract. I'm not supposed to pay or receive. If it is a lease in contract, then I'm not supposed to pay any of the amount for the very first month, right? Though, so in that case, am I going to recognize that particular amount under my asset? Over here, asset assignment is also done. Okay. Through REFX, we can also automatically create a new asset, and it will post to your asset accounting. Okay. So that is why we are considering the start of consideration date, end date, and absolute end date. So given the example that wherein the first period is lease free period, so I would not like to have that particular amount capitalized in my asset, right? Because ideally I'm not paying anything and I'm not receiving anything. So in leasing I'm not paying anything, so how do I capitalize that amount in my asset? So what I'll do is, over here I'll maintain the start of consideration date from second month onward. Okay, so that will be the start of consideration date. So that based on this date, system determine what will be the useful life of asset, what will be the overall tenure of the asset. Probable end date is end date something, and let's say if I have a contract, and in that contract I have a condition wherein the renewal of contract is available. So the probable end date and absolute end date will be different. So probable end date will be my first end date wherein the contract will be terminate, like is supposed to be end, and absolute end date is the date wherein after renewal the contract is supposed to be over. Okay. So whenever we are going to terminate, let's say a 2 year contract is there, and if we are terminating the contract 6 months before only, so there are few fields which we need to update, and one of those field is probable end date. Okay, so when we update this probable end date and run the valuation, their system like implies take that particular impact on your asset useful life. Okay, that is how your asset useful life gets updated. because ideally there was the useful life of your asset was for 2 years. Now it has been reduced by 6 months, so it should be 1 year and 6 months, right? So when we update the date over here, it will get impacted, or it will get flown to your asset master data as well. And simultaneously, when we run the valuation run, the reversal posting, whatever amount has been left for the 6 month of period, it will have a reversal of those particular amount. So vendor posting, if you remember in the start of session, I have mentioned that you can do whatever periodic posting you are doing. You can run it for either contract type or a particular contract, or based on the your business selection, like business partner selection. Okay, over here if you see, once you click on this, your business partner will be available, like input parameter will be available. Or apart from that, if you also think that rather than business partner or contract type, you need to run your periodic posting for based on your rental object also, you can do this. So once you click on this item, your rental object input screen will be available over here. Second thing is, if you want to check whether the contract is active or not, obviously we are going to post only for those contracts which are active, right? As in the activation has been done for those contracts, and system it will itself will not post anything those for those contracts who are not been activated. So now coming to period, there are two dates available over here. One is period date and second is posting date. If you see over here, posting date is there. So period date can be different from posting date. Let's say on 1st of August 2024, you are running for the 30th of July, 31st of July 2024. Because ideally you are running all these entry for the end of the month, right? So if you're running at the end of the month, you are supposed to post it on the first date of the next month. So your posting date will be first date of your next month, but your due date or due period will be July. That will be last month. So that is how you can select your screen or select your due date over here. So these are the postings which have happened. Rent is rent is there, base rent is there, storage rent is there, and memo is there. So overall, it is 11,900. Credit memo has deducted 100 out of the overall billing. That was storage rent and base rent. So the total amount was 12,000, but there was also a credit memo of 100. So it deducted that particular amount, and 11,900 is the net of amount. If you see over here, your condition type is also displayed. Your object is displayed. Then your contract number is also been displayed over here. Then calculation from and to date. Okay, one more thing over here, if you see the calculation from and to date. So over here, when you are running, selecting the due date, if, let's say I have selected due date as 31st of July 2024. So ideally, it should only run from for the whole month of July only, right? Because for June, I have already ran, on 1st of July. So we can check from this screen whether if we have posted only for July or not, and if any of the entries are coming from previous month. And if it is coming from previous month, then we might have to check that particular contact, why exactly it is coming from previous month, and whether we have posted in the previous month entries or not. Same screen. There is, if you have seen over here,
Hmm.
if we have brought any of the contract out of legacy into, there are two scenario. One we can create through one-time statistical posting, and second scenario is like, okay, business say that whatever posting we have done for last 2 months, we are going to reverse it in the legacy system itself, so that whenever we are migrating this contract to SAP, SAP itself calculates those particular amount. Okay, there can be a scenario, right, wherein some business says that, okay, we have just started with our new financial year, and we are in our second period itself. We have just posted for first period of our new financial year. So what we'll do is, in second period, we'll reverse all the entry in what we have posted for first financial period, and we can bring all these entry from SAP itself. So what in that case, what we will do when we have migrated the contract and by end of in second period and in end of second period, by when we will run the valuation or periodic posting, it will also pick up the first month, first period in postings, right? So similarly, we have the similar screen for valuation. So what all things are posted when we run valuation posting on a periodic basis? So it will debit your interest account. Okay. So if you remember or if you are aware, I have not mentioned, but yesterday, yeah, yesterday I have mentioned you about IFRS 16. So all the IFRS 16 contracts will have this valuation posting available. Okay, wherein you will be running your once you the very first time you run valuation for your contract, your right of use asset will be capitalized, your lease liability will be posted. Then on month basis, your interest account will be debited and your lease account will be lease liability account will be credited, and simultaneously one subsequent entry has been posted, that is nothing, we are parking an entry, we will be debiting our lease liability account and crediting our lease clearing account. What does that mean is, what we are on a periodic basis, we are clearing our lease liability account and parking that particular amount on a lease clearing account, so that whenever it is not necessarily required that at the end of the month we will be receiving invoices from vendor, right? It might be a case wherein a vendor might send invoices for the last month uh, on 10th, 5th, 6th or 7th of the next month, correct? That is current month. So in those scenario, what we do is we just run the valuation posting, through which it debits your lease liability account and credits your lease clearing account. And once we have received vendor invoices, we run the rewrap. That is nothing but your posting. This posting, we once we run the rewrap periodic posting for contract, then it debits your lease clearing account and credits your vendor account. That is how it flows. Okay. So if you see over here, as I mentioned, the very first time when you run a valuation for your contract, it will have your asset posting, your clearing asset posting, and clearing posting is nothing but your technical clearing account. Okay. So over here, these are all the entry: present value, asset account, and lease liability account. Then it has also parked to your lease payment account. So these all entries are generated through valuation posting. Any question? And if you see over here, flow types are there. So flow types are assigned to your condition type. This is your condition type. This condition type will be assigned to your flow type, and your flow type will be assigned to your account symbol, and account symbol is assigned to your general ledger account. Okay. So now what we are going to cover is planning and control. So under SAP RE-FX, we do have controlling available, through which we can do planning. So what does planning mean by? Planning is nothing if it is something like future forecasting. We have to do how much exactly we are supposed to receive, like future revenue we are supposed to receive versus how much we have already received. Okay, from controlling point of view, we have decided and we have created a planning profile. The same planning profile can be integrated with REFX. So SAP REFX provide planning of cost element per real estate object. We have accesses to many strategic reports like vacancy report, by duration and frequency, by imputed cost, report of planning versus actuals, commitments, grouping and simulation, by master data hierarchy, figure of master data. Moreover, we have standard reporting in SAP information system which cover master data contracts, measurements, rent adjustment, partner, service charge settlement, sales-based settlement, and controlling. Okay. So it says that we are having a standard reports which are available to compare vacancy report based on your duration and frequency. Imputed cost. Imputed cost is nothing the cost which you have incurred or you have lost the opportunity to earn that particular revenue. Reporting of planning versus actuals and commitments. Actuals and commitment, as in, if you are aware, within funds management, we have commitment items. So based on that, we can do what is the actual and what are the commitment items. We can also do based on your master data hierarchy, figures of your master data. So what all reports we have in SAP for SAP RE-FX? So very first report we have are for master data, that is for our business entity, land, building, and rental object. Then we have for contracts. Contracts are again which all objects are assigned to contract, what is the condition type assigned to the contract, which all business partner are assigned to the contract, and for IFRS 16, which all assets are assigned to in individual contracts. Okay. Measurements, based on the measurement, like what measurements we have available and against which each rental object or contract is assigned. Conditions, as I mentioned, like condition and contract mapping is there. Rent adjustment, if there are any change in a rent, then change overview are available. Partners are nothing but partner and contract mapping. Service charge settlement. So service charge settlement, in this will be able to see which all contracts are activated for sales based relevant, and what is the sales rule and reporting rule for those based on the sales based relevant contract. Controlling, as mentioned above, we have several controlling reports available. Land use management is there. Land use management is nothing but for properties. We have several report apart from like normal REIS PR report. Then for accounting, for what do we mean by accounting is nothing but we have cash flow report available. We have RE document posted available, which all documents have been posted, and what all like condition types are there, what all overall areas are there. Based on that, we can see over here. Okay. Account determination. So for account determination also we have some like how exactly the account determination happens. So we were covering account determination. So how exactly your account determination happens? So the very first thing that account determination triggers from within a contract is from condition type. Okay. Condition type is assigned to your flow type, and flow type is assigned to your account symbol, and account symbol is assigned to account general ledger account. Condition with flow types and reference flow types. Initial situation, the automatic posting in the periodic postings are made using condition type. The condition type, basic rent, advance payment for operating cost are independent of usage. Third party usage, own usage, vacant. Each usage type, third party usage, own usage, vacancy should have a different account. The account posted for distribution posting must be different from the accounts used in reciprocal posting. Okay, so let me just quickly show you how exactly this flows. Okay, let me log into SAP and show it to you. Are you guys able to see my SAP screen? Under Rekha, we have this node called condition and flows. Okay, so over here we define which all condition types are there and what will be the grouping of condition types. So if you see over here, define condition types. So these all condition types are already available. Basic rent, office basic rent, warehouse basic rent, store basic rent, rent reduction. Out of this, few of them are I have configured, and few are like standard solution. Okay, so I'll quickly go. If you see over here, store basic rent, it has been selected as minimum sales based rent, maximum sales based rent. So that means this one is saying that this particular condition type will be assigned when a sales based scenario will be activated. So I'll go to basic rent. Now the basic rent, it has particular attribute like minimum, maximum sale, base fee, flat rate. All of these are available. Then we have flow type available. So over here we assign the flow type. Okay, on basis on this it will trigger. We'll go and check what is this flow type and what are the flow type assigned to account symbols assigned to this flow type. Apart from that, if any of the condition type is supposed to receive the revenue, then we can activate this. And calculation formula, as I mentioned, if you remember calculation formula, we can define fixed amount, object measurement based on the object measurement. Like let's say one object is of 700 square feet and a second object is of 300. So based on that also it will segregate the amount. Sales based rent is there. Then distribution formula. If you remember, I have shown you distribution formula, that how exactly this will be distributed. Divide equally, object measurements. Okay, these all standard functionalities are there. Now I'll go and see the flow type. Again, this is the grouping condition over here. What is that grouping? This is condition purpose over here. If you see posted, one time posted, statistical, all of these are condition purpose which you can define. Okay, and over here if you see external condition purpose, all of these activities you can assign. This is nothing but for your condition type. Based on your condition type you can specifically assign it. Once you have done that, then you need to group those condition type. What do you mean by group those condition type? Grouping will be available for your contract type. So let's say this is customer contract commercial. I have done a grouping of this. So all of those condition type which will be available for this particular contract type are maintained over here. That is called grouping. Grouping is nothing but we are defining which all condition type will be available for one particular contract type. So basic rent is there, sequence is there, actual, and the condition purpose which we have selected is actual purpose. Okay. Then adjustment rule is there, whether it will be flat or cost efficient, free customizing. Majorly it should be free, and for service charge related it should be service charge, and sales based related it should be sales. Okay. Now coming back and showing it like flow type. Yes, this is the flow type. Can you see define flow type? So this is what the flow type was there, which was assigned to basic rent. Against basic rent, can you against this flow type, the debit indicator is there. Okay. Now one more thing which we need to take care of. Suppose we are this particular transaction condition type is supposed to be debited or credited. Then over here we are going to select credit. Okay, now that particular basic rent is going to be credited. That is why we have selected over here as debit. So credit as in it will be a basic rent income. Okay, so why exactly we are doing a vice versa? Because flow types also simultaneously post equivalent entry to your condition type, and that is how it will get flow. So debit will be your flow type and credit will be your account symbol. That is why we are defining it as debit posting. So at the end, your account symbol, whatever account symbol is there, your accounting entry will trigger based on that. And over here, if you see accrual and deferral entry key is there. If I do F4 over here, ANR VCN. ANR VCN, what does it mean by accrued revenue contract? Accrued revenue rental object. Accrued cost rental object. Accrued cost contract. So these are the standard keys which are there, accrual types which are there provided by SAP. Now we'll see this particular flow type is assigned to which. So 100, can you see 100 is there? So as I mentioned, this is a revenue income. That is why it is getting debited. And your credit will be your revenue account, debit will be your customer account. Okay. And over here also you need to maintain this. Now, if you see in this line item over here, both of them are debit general ledger account and credit also general ledger account. So why we are using this is because it is for own use. It is nothing but a intercompany contract is there, and that is why we have maintained it as own use. Apart from that, account determination. If you remember, I am informed you like we can maintain it for account determination, wherein we can use separate GLs for individual condition type. So based on this account determination over here, now the GL have been separated. If you see the same condition flow type is there 1003, 1003. Just the debit GL is 108 over here and over here 1118. The credit one is same for both of them. Based on the account determination value, you can define which all GLs you want to be posted. And quickly I'll show you one of the example of leasing scenario. So this is one of the example wherein your debit account is general ledger account and credit account is vendor account. So if it is getting uh, credited over here, ideally we should be having a credit indicator for this one, right? So B17 will quickly go in flow type and see B170. So whichever line item, as in the customer or vendor account you are using as a debit or credit, you will be selecting the same over here. So if the vendor is getting credited, you'll select it over here, and if your customer account is getting debited, then you'll select debit over here. Okay. So this is how your accounting determination happens using condition type, flow type, and your account symbol. One more thing which is there is reference flow type. Your flow types are also assigned to your reference flow type. If you see, 1000 is assigned to your reference flow type 1001. And relation over here, you can see there are multiple relation which are available. Follow posting due to condition increase, follow posting due to condition reduction, installment, irrecoverable date. What does this relation mean by? Or what is reference flow type? So reference flow type is nothing if you are making any kind of changes to your condition, and if those condition want to be like those particular amount needs to be updated based on the scenario business processes, those particular reference flow type need to be activated so that the reversal or updation or increase in or any of the distribution of your condition can happen. So this is the flow condition type, then flow type, then comes your reference flow type, and then come your account determination. So account determination involves your account symbol and your GL account. REFX customizing. So account symbol based on the transaction type is formed from condition. So account symbol is assigned to your general ledger account as I mentioned. So that defines what account will be debited, what account will be credited, and based on that, we'll have our posting in our financial books. So it is just a flow of how exactly the data and account determination happens. You can quickly go through this and let me know if any questions are there. Partner cash flow and object cash flow. If I have mentioned this earlier as well, like there are two cash flow through which we'll be able to define how much exactly we are going to pay in future based on the condition type which we have assigned and the condition amount. Okay. So procedure for setting up automatic account determination. So as I mentioned, the very first thing is define flow type in REFX, assign reference flow type for each flow type and relationship key. Create condition type and assign flow type to the condition type. Create general ledger account
in finance and create the account symbol in customizing for SAP RE-FX accounting. Assign general ledger account to your account symbol. Assign account symbol to your flow type. Then assign condition type to the condition grouping. Condition grouping, as I have shown you, the grouping, why we do the grouping is so that we can define which all like condition type will be activated for contract type. Assign condition group to the corresponding contract type or rental object type on the basis of the assigned usage type, rental object types. Okay. One more thing I have, which I have not shown you over here, is like I have shown you the grouping and assigning of condition to the grouping, but I have not shown you assignment of grouping to the contract type. Assign condition group to the contract type. So let's take an example of commercial leasing. So commercial leasing, it has condition grouping of CU00. So ideally it should have all the lease in related conditions, right? CU00 is CU00 vendor contract. Credit basic rent, credit energy supply, credit security deposit, minimum rent, sales based rent, maximum rent, credit. Why we are saying credit is your expense account get credited. Sorry, your yeah, sorry, your vendor account get debited, and your GRI. Sorry, in this scenario, it will be your GRI expense account will be debited and vendor account will be credited. Okay, yeah, this is account determination thing. Now flow type. What are the flow type and what are the purpose of flow type? So as I mentioned, condition type is assigned to flow type and reference flow type and then account determination. So what does the reference flow type is? There is a retroactive increase of receivable, that is after periodic posting has already been performed. Then how do we change that? Using this particular flow type, that is 010 relation key follow posting due to condition increase. When we have assigned one of the flow type to this relation key, it will pick up. Follow posting retroactive condition increase is 10, then your condition reduction is 20. Distribution posting object transfer, this will be used when we are having cost center transfer, and that is nothing for internal usage. We'll be using distribution posting on usage. For vacancy, if we remember, we have used account determination for vacancy. So over here we can define if it is vacant, what should be the relationship key. If we are using any service charge settlement related, then receivable from settlement, credit from settlement. Receivables from settlement, as in you have paid the cost on behalf of your tenant and you are now recovering it, then you will use this. Credit from settlement is nothing but you are the user of that particular property and services, and now you are supposed to pay it back to your vendor. Installment agreement, irrecoverable date, these all relation keys are there. Based on the given situation, the system recognizes if it should use the flow type that was originally assigned to the condition type, or if it should use a reference flow type. Okay, so if you are doing a normal posting, ideally it will pick up the flow type. But if any of the reversal or change in the condition is there, then reference flow type will be used. Flow types allow to define and control automatically generated postings such as periodic posting or one-time posting based on flow types. The partner related cash flow and the object related cash flow of contracts are calculated. You can define reference flow type to calculate the cash flow in case of follow-up posting due to condition increase, follow-up posting due to condition reduction. Then distribution transfer postings are there. So these all scenarios are there for flow type. General ledger. How exactly? What are the purpose of general ledger accounting and how exactly it triggers? Two different version in general ledger accounting component. One is classic general ledger accounting, which is you guys are aware. In classic, we did not have any like document splitting and all available. zero balance profit center accounting. All of these were not available. Existing customer can choose between using classic general ledger accounting or activating the new general ledger accounting. General ledger accounting new. The new general ledger accounting is automatically active for new customer. The new general ledger accounting is more flexible, particularly in handling parallel accounting, and also enables you to automatically split document based on defined document splitting characteristics. Okay, as I mentioned, that new general ledger accounting has document splitting, profit center accounting, and parallel ledger accounting also. Any queries on this? General ledger constraint. What are the constraints in terms of general ledger? Service charge settlement, sales-based settlement. If all the following apply, it is not possible to perform service charge settlement and sales-based settlement. You activated the new general ledger accounting and profit center accounting and assigned the profit center update scenario to your ledger. You posted advance payment as special general ledger transactions. You want to settle service charge or sales-based rent using the actual principal. So all of this cannot be performed in general ledger accounting because this will be performed through service charge settlement and sales-based settlement scenarios. Integration with new general ledger accounting. So now how does new general ledger accounting helps in this? If all the following apply, it is not possible to this one. Integration with new general ledger accounting. Classic general ledger accounting existing tax type. In this activity, you enter the necessary tax type. Specifying tax type is mandatory. Tax types are country specific dependent. You can define multiple tax type for each country. So there is tax type and there is tax grouping. So we'll see what all tax type and tax grouping is. Specifying tax group is mandatory. The tax group determines the tax rate of for a transaction. The tax group together with country, the tax type, and possibly the region determines the percentage. So how exactly the tax type and tax group is configured? So tax type is nothing but grouping of your, let's say, input VAT or input output VAT. So we'll create that as a tax type. And input VAT, let's say there are multiple VAT rate based on the scenario. Then we have tax code created for that. So what we will do is we will assign those tax code to your tax grouping. So over here, do not confuse yourself with like tax grouping is like input VAT. It is ideally a tax code, and tax type is your input VAT and output VAT. So I'll show you in the system as well. So define tax type. So tax type, if you see over here, based on the country, I have defined MWST and MVST. What is MWST? Output, and MVST is input. Okay. Now I have created one of these tax type for my requirement and for individual country. Now what I'll do is I'll go and assign this tax type to, these are the tax group. Okay. Half, full, these are the tax group. Over here we are defining what should be the default value of tax type and tax grouping. Okay. Now I'll show you how exactly we maintain the tax code. So we had created DEMVST, if you remember. Now the tax group is half, and against half, what should be the tax code? V2 should be the tax code. So tax code will be coming from again financial accounting, the FTXP transaction code which we use using FTXP, whichever tax code we have created, we can assign it over here. Okay. So V2 is for input tax, reduced tax rate. What we have defined the tax grouping is half, none, and full. Full is for V1. What is V1? Input tax full rate. Okay. So simultaneously we can do this. Now let's say there is a scenario wherein one contract requires that two tax code to be clubbed as together. One tax code has 5% and second tax code has 3% of tax rate available. Now at the full, I want it to be 8% only. So what I'll do is I'll create this new line item. One will be with 5% and second will be with 3%. But the tax type and tax group will be same. So while calculating at the contract level, system itself will determine and calculate 8%. So we can club the tax code as well. So these are the transactions, tax type, tax group, country, and all of these tax codes. Okay. Any questions on this? What transaction key we want to assign to our tax group, we can assign it over here as well. So this is how your tax group can be defined. Same goes with withholding tax. You can post condition with withholding tax using RE posting process. Condition with withholding tax data can be processed in these processes: periodic posting, one-time posting, service charge settlement, and sales-based settlement. So these are the scenario wherein WHT can be used. WHT features: if you make these settings, then the system generates the following data. When you post invoices, the system generates withholding tax line. When you post payment, the information for withholding tax is transferred to the document from which the withholding tax is posted. The system also checks if all required withholding tax types from the master data which are relevant for the payment are in the line item. Procedure for withholding tax is to create the withholding tax term in customer or vendor real estate contract. Proceed as follow. You are processing a contract and are on the posting parameter tab page. Choose the quick info text create term and choose the withholding tax entry. On the withholding tax tab page, you can select from two functions when you choose the quick info text add withholding tax. Purpose partner data, propose partner data, or add blank row. Assign the condition which is used for posting the withholding tax to the withholding tax term. To do so, choose the condition tab in the contract processing. Okay. So within contract, we have posting parameter tab available. Under posting parameter tab, we can assign withholding tax. So if we have activated withholding tax for that particular country, then and if that country is assigned to the company code, based on that, withholding tax will be activated. Okay. Select the condition type you want to use for posting withholding tax. Choose the term tab page. Enter the number of the term you just created in WHT field. Save your entries in detailed data for the withholding tax term. The assigned condition now appears on the condition tab page. Adjustments. What do you mean by adjustment is? So let's say we are using any of the interest rate on our valuation, and based on the consumer price index or the inflation, we want this particular adjustment to be assigned to our contract, based on which the interest rate will get fluctuated and it will get changed. Okay. So that is why the adjustments are used, like for consumer price index or any of the inflation or any of the third party tool wherein we are updating, fetching the data from. It will determine your interest rate for your valuation parameter. You have defined the required adjustment rule in customizing. For more information, see defining the adjustment process in the contract. So there are multiple adjustment available under REFX. One is consumer, one is free adjustment. One is consumer is nothing but customizable. Okay, and free is like we can customizable is like we have already defined it and we can use it. And free is something based on our requirement or based on the changes in the market, we can change the interest rate, incremental borrowing rate. So yes, we this is what overall contract management is for as of now. What we have covered today is contract, how exactly the contract screen looks like, general data tab, what is the valuation tab. Then apart from that, we have also checked what are the condition purposes, right? Then we have seen how exactly we can determine our general ledger accounting, through which we can like condition type is there, it is assigned to your flow type, then your account symbol, and to your general ledger accounting, and which all periodic postings are there. We have also seen that.